So let's give Adam a call. Stand by.
Hey Dale.
Adam, how are you, buddy?
Good, crazy day.
Yeah, this is.
This is a good one.
Your kind of day. I want to start off by again acknowledging a great seasonal call that you made last month. I was on the other side of it. You talked about yields continuing to fall, and shorting the bonds was a widowmaker, or led to many divorces. I'm happy to report that although my TLT puts did not work, my wife and I are still together. I was telling the whole community, I'm really looking forward to what your work is saying to you for September. So
Great.
Looks like we're going to make a new high in the S&Ps. I'm looking for a turning point tomorrow at 2020. What do you think?
I mean, we are. This is live trading. It's good to have a live room. I mean, euro dollar right back at 130. Yeah. Stocks, I think, just hit the record high, Dale. So, yeah, live trading, live. I mean, like, last month we talked about oil shorts as well. That was a good seasonal trade. We're going to talk about that some more. I mean, it didn't get any better about that. We talked about Kiwi weakness, euro weakness. Talked a little bit of dollar yen weakness, and that didn't really happen. And Aussie strength. Aussie did all right.
Considering how strong the dollar was, it was commendable.
Yeah, well, that's kind of been one of the themes I've been focusing on, is that, the second best performer, Aussie, it's hung right in there, and there's no talk about it. People are a little bit long, specs are a bit long Aussie, but, today we're up again. Europe printing. So, it's good news if you're a commodity producer right now, and we're seeing that come through the market. Where do we want to start, Dale?
Well, here we are after Labor Day, buddy, and I'm thinking that the bonds, I don't know what caused the big break in the bonds. Maybe it was the yen strength. That correlation broke down because normally when U.S. dollar yen is going up, yields will go up. And the yen was rallying, but yields kept coming down. But Monday, it left a huge gap. The bonds left a huge gap. I don't know what the catalyst was for it, but it's an island top, Adam, and that's a pretty rare formation.
Yeah, it got so insane. I mean, I think Germany was driving. Boons were rallying so much. And then you got down to, I can't remember what the low was, the 95 or even down to, we were into the 80s, right? 0.88% or something in German 10. Am I going to have to
pay the Germans to own a bond? Am I going to have to pay them interest to own it?
For 2 years, you do now. Germans and the French. So we got there. But let's spin it back. We'll talk about the ECB in a bit. I've got some charts here, so why don't I throw those up? And we'll talk about just the news that just happened with the ISM.
Okay.
And just good news, and that's been the story. I hope this runs. Does that look good? We've got so I started off with a chart. That's ISM non-manufacturing index. I mean, that's a long-term chart, wow. Highest since 2005, employment highest since 2006. What planet are we on here, Dale? The Fed is still printing $25 billion a month. Rates are at zero. I mean, what charts are they looking at? That's an 8-year high almost in the and we see it right. It's not the only chart. Over the last 2 months, it's been one after the other. Strong numbers. You hardly ever get a miss. Yesterday was vehicle sales. We were at the highest, I think, since 2006 there as well.
Ellen's looking at FX brokers' volumes being down and compressed volatility, so she's going to stay easy because you're right. The economic numbers have been great. There are sectors, and I do believe the FX industry is suffering from lower volumes and lower volatility. So maybe Yellen is talking to people at Olanda and FXCM. But you're right. So that builds a case for a bond top, doesn't it?
They can't, exactly. They can't, but they cannot stay here. They just can't. I mean, this could be, the market is getting ahead of the Fed here now. The market's saying, listen, we've heard enough, Yellen. You're going to hike. And you're probably going to hike before July next year. The numbers keep beating. Everything's happening. This is going to be the September to remember, Dale. It's turning around. The volatility is going to come from dollar strength. The hedgers are way behind. Nobody's hedged against dollar strength. They're going to start pouring in. Dollar yen up 110. Euro dollars in its own little world. It's collapsing. Cable's going to retrace.
A lot of Elliott guys near the top were talking about 127 in the euro.
Well, yeah, 127. There's a nice little bit of support around there. I mean, 125. The momentum's out of control right now. We'll look at a chart in a bit. So I mean, that's the story. Does not make any sense to still be printing at this point. So anyway, obviously the other big story among many today, queued up with the euro. Just mentioned it now. So there's the chart. I mean, it's collapsed. I mean, you can argue for buying the euro, but only due to oversold conditions. I mean, what did the ECB do today? It's QE. I mean, it's asset purchases outright on ABS. There really is no ABS market, so they have to stimulate it in order to buy things. TLTRO is coming up. They cut rates, covered bond purchases. I mean, they're even talking. Some people already want to do sovereign QE. So I mean, they're going nuts here in Europe. I mean, it's great for risk assets. That's why stocks are rallying. It's good for commodity currencies. And you know what's going to happen in Euro Swiss. I know people want to hear about that. That's going to be very exciting. What was the low today? 120.43.
They're going to let the peg go and clean people out first, aren't they?
I think they're going to hold it ultimately, but there's got to be some political pressure. I think we're 3 days away from the 3-year anniversary. It's supposed to be a temporary measure. Is that temporary? 3 years? They did a poll, Bloomberg, the other day.
Well, so was QE was going to be temporary. And it lasted how many years? 7.
Yeah, it's been, and I think they did a poll of economists the other day on the S&B, and almost everyone thought it was going to last for another 2 years. And you know, it's outright manipulation of currency what the S&B is doing. And you know, how do they get away with it? I don't understand how they're allowed to get away with it when Europe has lower inflation than Switzerland, lower growth. Obviously, the euro should be lower, but I mean, whatever, Switzerland gets away with it, and I think it's a lot to do with their banking power. And because there's so many assets in Switzerland. But on the euro chart, I mean, I like the downside, but you know, it's hard to love the downside. You've got a very crowded trade. It got a lot more crowded today.
Yeah, I mean, it was crowded before today. I believe we were at 6% bulls, the lowest reading since 2011.
And if you look at the chart, there's hardly any bounces since about 136, the break there. It's been a straight line. I mean, what's the biggest low to high you can find there? Not even a cent.
Yeah.
So it's tough to get in, but the best trends are like that. So if you're ready, we start to talk about some seasonals. So September is the start. I mean, I don't want to talk about Euro seasonals too much because ultimately it's a tool in the tool bag, and it's something you pull out when there's not a lot going on. Fundamentals dominate the Euro story right now, and besides that, it's not a big tell of a month for seasonals for the Euro anyway. So the first one I want to talk about is the Kiwi, and put the chart up after a very strong month for the Kiwi, second best month over the last 10 years on the Kiwi, and that's including one very bad year in 2011. So, you know, I think, you know, today is a good day to talk about it because we might be near a short-term bottom here. I don't, you know, New Zealand has its problems and whatnot, but it's beaten up. And you have the risk trade that's going to be as good as ever here now because of what the ECB is doing. The Fed is still dovish. You know, maybe not necessarily Kiwi dollar is the best trade, but New Zealand dollar in general. The other one,
a lot of people have been, favoring Aussie Kiwi long side, and that's been working big time. So maybe we get a rest in that trend and a correction because of what you're seeing seasonally in Kiwi.
Kiwi strong. I mean, Aussie is not quite as strong, but it also could be strong on the dollar. And I think both these currencies can really go against the rest of the field.
High yielders.
High yielders in a low printing environment. Stocks making new high environment. You know, commodities are going to get goosed here again. You know, so it's good for when we're starting to see signs of investment in Aussie. That's what I want to talk about here. The offshore oil investment is for real in Australia, and it's something that not many people are talking about. It's the old story. It's still there, but offshore oil investment is really coming to Australia, and they have a lot of coastline. And you know, there's a lot of people who believe there's a lot of oil down there.
Heard that.
Yeah, it's got BP's putting in some money, and it's not necessarily that it'll pan out, but you hear these investment talks, $1 billion, $2 billion, you know, $10 billion over 10 years, and those are flows into Aussie dollar, and the property money is nonstop. I mean, the latest stories show, they're skirting all the rules. Real estate agents will take any money really to get the commission, and they're buying houses. And if you're in China and you're breathing that air, I mean, Australia's paradise, right?
Okay.
Dollar CADs. This one's a little bit inverted. Interesting seasonal pattern starting to shape up. September is a weak month, and that's already started to play out. And we're getting down. We're almost at the lows again here today at 108.30. We had that bit of a bounce over the last 2 days after that squeeze at the end of the month. And I think we could go lower here, but the real story might be the strength in dollar CAD in October, November. So we get this temporary blip down to, say, maybe something with a 106 handle, and then we rip from there.
Okay. Yeah, I was thinking 107-ish.
Yeah, maybe 106 is a little bit aggressive, somewhere in the low 107s.
Okay, and then into year end, we could retest the 112, 113 levels.
Yeah, get up. Well, the Fed starts talking hikes. That'd be an avalanche when
Yellen off in October, November.
Yeah, I mean, it is.
I was taught Thanksgiving is for the Bears and Christmas for the Bulls.
Yeah, that's a seasonal trade right there, and it's the start of an okay seasonal period here for stocks. But then, in November you get that decline, but December you have to be long stocks. I mean, year after year, it's strong into year end, and probably be the same this year as the market chase performance with the S&P 500 over 2,000. And another one we talked about last month, and why I highlighted it last month, was this is the start of the worst time of year for oil seasonals. And boy, was short oil a good trade in August. It was very volatile the last couple of days.
A lot of people looking for 91 to be a significant support level where we might get another bear market rally.
Yeah, I'm not exact. I think so too. I'm not crazy about it now because we've dropped from 105 down to we're at 94.80 right now. We've got some numbers coming out in the next little bit, the EIA numbers. So, I'm not crazy about shorts here, but I think, the theory we had is the market every year gets too excited about hurricanes. They haven't panned out once again this year, so maybe we get a hurricane story, get oil back up to, say, 96 or 98, and then short again from there through, for the next couple months. Last one, so with charts, we talked about Aussie dollar. I mean, I really like this Aussie dollar story because not many people are talking about it. Those are my favorite bull markets or good markets when no one's talking about it, and it was resilient. We talked about Aussie weakness was one of the seasonal trades last month, and that it didn't happen is good news for the Australian.
True. When you have when a market bucks a normal seasonal trend, that's a market tell, isn't it? For turning and going the other way.
And there was bad news in Australia, some poor economic data. It bucked it as well. And now here we are. There's this wedge. You can see that red and white lines, and you really need to get up above that to get things moving. Probably don't have the momentum right now, but
I've heard calls for this wave 4, or I forgot the exact wave it was in, but 96, 97 was a possible longer-term target. Yeah.
I mean, Stevens has taken rate cuts off the table now. It's still a very good story that, we were 2.5% in Australia. Where else can you get that? I mean, 10s don't yield that much. That's why the bond story, ultimately you can stay low unless the Fed gets up to, 2%. Then you really have to start worrying as a long-term bond trader. Anyway, so Aussie, I'm really starting to like it. These last, you have this bullish engulfing candle yesterday and then and broke in the August highs, so it's a good news story in the Australian dollar. The closes today are going to be very important. Kiwi dollar, we talked about that, buying the dip. Technically, it's below all the moving averages. There's no real support here. That's what concerns me a little bit about Kiwi. So, the signs might not all be aligned for Kiwi strength. I would like to see some sort of technical support or maybe some sign of a bottom. Some good news. These milk auctions continually weak. There's just not a great reason to buy the Kiwi other than commodity markets starting to come back. But if we can get another few signs, or if we get another blowout maybe in Kiwi, that'll be the time to get long.
Looks like on the shorter term time frames there are divergences beginning to develop there. So maybe you could play catch up with the people unwinding Probably the pressure is also because people piling into the long Aussie Kiwi trade.
Yeah, that's probably got to unwind at some point. I mean, 88 down to 83 is a pretty quick move in the Kiwi, and you're still paying to hold shorts. I mean, to chase out the shorts in Kiwi, all it has to do is move sideways because you have to pay every day to bet against it. So it doesn't take much to get a squeeze and get back up to 85. So let's switch back to the old video here. And what do you think, Dale, about the geopolitical situation?
I think that it's being underestimated. And I think that Putin wants more of Ukraine. And he wants it because he's developing that Sino-Russia pipeline to China. And it's not in Crimea. And if Europe is going to move away from Russia for energy supplies, he's found new buyers in Asia. And so he's got to protect that pipeline. So I think there'll be, times where it looked like, he's going to talk peace, but let's face it, Russia needs its natural resources, and unfortunately, these pipelines are not located in Russia.
Yeah, and I think, today even there's talk of attack on Mariupol, which is the next city along the coast. And, I mean, that's quite a provocation with the NATO meeting today in Britain. I mean, it's clear. My theory, when the plane crash happened, was that it was a tremendous opportunity for Russia to make peace and to square this away. And when they didn't, you had to admit that Putin was going all in. He was double down. He was going to double down. He didn't care what the rest of the world thought. And he's not worried about the sanctions.
Well, he saw what happened with the Red Line in Syria. And the vacuum of leadership in the world with us U.S. people being war weary. And budget cuts with our military. That vacuum, didn't. Guys on Twitter understand the power vacuum, so I'm sure a CIA guy like Vladimir understood it as well.
Yeah, and when you have term limits in America too, Obama's essentially on the way out the door now, and Putin's going to be there forever, it seems.
So that's my take. Unfortunately, it looks to me like. Hopefully it doesn't turn into a hot war where we're involved. Putin talking about things like he could be in Kiev in 2 weeks. And don't forget that Russia is one of the strongest nuclear powers on the globe. Worries me.
Yeah, absolutely, no doubt. I mean, it's fallen onto the back burner once again. But this other round of sanctions has to come. Europe and the United States will look very weak if they don't introduce new sanctions. I mean, this week or next. And in that case, Russia they will continue to expand in Ukraine.
So I think the markets eventually, I think this fall will take notice of how serious it really is. It doesn't. It's just like everything, Adam. Things don't matter until they do, and you never know what the tipping point or when the tipping point is going to be. But I don't see a resolution of this.
Yeah, and timing is. I mean, it's the difficult thing. We talked. I mean, at the start of the year, everyone wanted to be in euro shorts because they saw economic weakness there. But it wasn't until the ECB started to take some real action and just keep readers watching or listeners alive here. We're down just below 130 again, 129.90 in the euro.
And
so
you know what, Adam? I
fresh
want to
lows.
acknowledge you. You never changed your tune from the high of 139.90 or so in the euro, from nailing that top. Every interview since then, you've reiterated your negative view on the euro. You're a champ. Nice work. Nice work, Adam.
Oh, thanks. I just humbled, Dale. I mean, it's always so honored to talk with you, and just follow the trends, right? Yeah. That's what we do. And the euro trend, so many people try to fade the trend or buy the bounce or say it's too oversold, and here we are carving out new lows.
Stop reminding me.
I'm sorry. But you know what's next? I mean, the dollar yen is probably the next one to go, and it'll be the same thing from 105 to 110.
Yeah. You look at the weekly chart, and I was talking about that. I turned positive the yen because it was bearish the bonds, and it looks like third drive to a top coming. I think 107.50, 108, maybe 110. You know, rubber bands always seem to stretch further than you think they can, don't they, Adam?
Yeah, I mean, this dollar trade is going to be a big one,
What's
though.
your long-term targets? Are you a
Well,
120 euro bear or a parity
it was
guy?
in euro dollar. I mean, I think the ECB was talking about sovereign QE today. I mean, there's no growth there. These unemployment numbers are obscene, and if they get everyone on board with sovereign QE, they might as well do it and drive the euro down to 120.
Can you think of one thing that could change the structure of this dollar trade for, a trend reversal? Is there one thing out there that you could think of?
I mean, that's why it's our job to think about it, and it's still hard to do.
I can't think of one thing. Can you?
It's still. I mean, Yellen isn't going to start ramping up the printing presses again. I mean, the economy could stutter a little bit, but it's still going to be better than Europe, Japan, and others.
It'll have to be a confidence crisis. Maybe it's a stumble on the geo stage.
Yeah, and I think down the road there are some demographics. I mean, we're talking 5 years out, though, so it is. I mean, we will all be retired on the beach by then.
I'm hoping. Thank you so much, Adam. Good hunting to you the rest of the summer. We have a few weeks left, and thanks again for filling us in on your excellent work on your seasonals for September. Basically, all the commodity currencies look good. That implies lower USD CAD. That may set up a nice buying opportunity. Kiwi. Due for some type of bear market rally, and the Aussie people just aren't aware of it yet, which makes it an attractive long.
You got it,
buddy.
Have fun,
thank
Dale.
you, Adam. Talk to you soon, my friend. Good hunting.